Today it's quite an eventful day. We have multiple data points as well as many events which are likely to shape the market moves. And as a preview to that, we are already seeing sharp moves as the US session has got underway. Later in the day, of course, we have the all important FOMC monetary policy announcement. Though there are not many changes expected, but I think we will be looking at the press conference and we will be keenly awaiting any details of coming changes. Means not this time around, but in the second half of this year, if there are any possible changes to the bond buying program of the Fed, and that is going to be a key thing to watch out for. Apart from that, we also have Mr. Joe Biden, the President of United States, unveiling his plan, the stimulus measures, and on that front also we will have to watch out for new details. And then we have these quarterly earnings from the major companies in the US. We saw that Google has reported strong earnings for the last quarter and it has jumped more than 6% in today's session. And after the bell, we have Apple and Facebook also announcing their quarterly earnings. And here, most probably, we will see strong revenue growth from both these companies. And Apple will be a key company to watch out for, and their revenue guidance will, of course, be determining the share price momentum for coming days. Facebook is likely to see revenue growth in advertisement as many people were glued to their smartphones and computers. As a result of that, most of the things have moved digital, and these tech companies have benefited in this pandemic. We also got the WTI crude oil inventory data, and here there is not much of an rise in the crude oil inventories. We are seeing only slight increase of 0.09 million, so it's almost flat and a lot less than the expected increase of around zero point 0.5 million barrels. And as we saw that this has caused the light crude oil prices to spike on the higher side. In last session, in yesterday's session only, I had talked about the possibility of light crude oil breaking through on the higher side, and that has unfolded. And even now, I think we can continue to look for any buying opportunities there. But of course, we are not going into details of that. And today's focus is going to remain on the currency side, where the Euro USD and dollar index are the instrument of choice for us, as I am expecting sharp moves in both these financial instruments on account of the Fed's monetary policy announcement. And here, as I said, the interest rate is likely to be left unchanged in the band of 0 to 0.25%, and also the asset purchase program is likely to continue at $120 billion per month. So no changes there. But as I said earlier, we have to watch out for any clue from Mr. Jerome Powell on the likely shift in coming quarters. Now, moving on to the technical side, first we will consider the Euro USD and then we will see what's happening in the dollar index, where we are seeing sharp move on the lower side, and I feel in next coming session we will see the dollar index again retesting the important level of zero point 0.9. Let's get started for the technical session. First, we will consider the technical outlook for the Euro USD, and then we will move on to the next instrument. So here this is the daily time frame chart, and on the daily time frame chart, we have seen the continuation of the bullish momentum. Of course, on couple of occasions, the Euro USD has corrected slightly, but not much. And then after the consolidation, it has picked up the momentum again. And this time around, also similar story is likely to play out. In today's session, we were seeing consolidation happening, unfolding closer to 1.208 level, and the Euro USD spent most of the day closer to that level. But as the US session has got underway, it is seeing some fresh buying momentum, and it is not far away from the 1.21 levels. And I feel now that this bullish momentum is taking hold, we can expect this immediate swing high established couple of sessions back to be broken, and in due course of time even the move towards 1.215 can't be ruled out. Of course, a lot is going to depend on how the price action unfolds after the Federal Reserve's monetary policy announcement, so we do have to watch out for that. And it will be better if we simply sit on the sidelines and allow the price action to dictate our next move after the monetary policy announcement. But in run up to that, we can of course see what are the technical levels which we need to keep in mind as we look for trading opportunities after the meeting. So here we have this consolidation unfolding in Euro USD with the lower side support coming in place around 1.205, and this has been the price level which has acted as a near term strong support area, and we didn't really see any major break on the lower side. And this is also the price area where we had these prior swing highs in earlier phase of consolidation, and then this time around it was acting as the support. And as you can see from the charting, we are pretty much looking at the possible breakout above this immediate swing high, as I said, and then the possible move towards 1.215 is pretty much looking is pretty much on the cards. If you consider these both the technical parameters, the regression curve as well as the pivot point series, both are pointing north, and I think that is also the direction which we should be trading. So if you want to look out for any entry point in today's session, I would say that if you are fortunate enough to get any correction in the Euro USD, and if you are able to get the entry anywhere in this confluence area of 50 and 100 SMA, which is there closer to 1.207. I think that is the price area on which you can try to initiate the fresh position on the long side. Any buy order can be placed in this vicinity while keeping the stop loss just closer to or below this day's low established around 1.2055. So I think for a risk of around 15-20 pips, we can expect the move beyond this swing high. And as I said, even the 1.215 can be targeted. And even if you are not looking to wait till that, the risk reward ratio of 1 is to 2 is going to be achieved even if we see the retest of this swing high level. So from the risk reward ratio point of view also, the trade looks favorable enough, and of course the technical formation is also quite good enough to be confident while looking for the trading opportunity in the Euro USD. Now moving on to the dollar index. This is the daily time frame chart, and here we have this continuous slide in the dollar index starting closer to 93.5, and now it is not really far off from the 90.5, and then onwards to the 90. And I think we are likely to see the continuation, and I'm not really expecting any turnaround in dollar index not until we see these retest of the near term support. So in today's session also, the trading opportunity I'm looking at is pointing on the south, and it will be better if we continue to look for shorting opportunities as the technical formations, both these pivot point series as well as the regression curve, are inclined on the lower side. And here, as you can see, the first support which was broken in the earlier week has now been acting as the near-term resistance, and even in today's session we are seeing that 91 has been the key level for the dollar index, and it hasn't been able to sustain beyond that. And I think any entry on the short sale side while keeping the stop loss closer to these prior swing high should be good enough. And on the lower side, the support is not really in sight. We have the second support of this month's pivot point series all the way on the lower side at 89.58. So in these coming days, we don't really have much of an hurdle on the lower side, and I think that is where we can try to capitalize in the dollar index. And in today's session, we can expect sharp moves, as I said, on account of the FOMC. And in lead up to that, if we don't really see any fresh breakout above this day's high, then I think if you are again fortunate enough, as we have this dollar index quite on the lower side now, so we will need it to correct bit, and then it should be spending time here. And once we have the FMC announcement, after that, if we can get the entry anywhere closer to this, depending on, of course, the price moves immediately after the announcement. Of course, we will have to wait for a couple of hours, and only after that we will be getting the clearer picture. And technically speaking, if we don't really have any fresh breakout immediately above this high, then I think entry anywhere in this price band below the 90 to 90.90 should be good enough to initiate the short sale trade, while keeping the stop loss anywhere closer to this 200 SMA zone of around 91.15. And on the lower side, the price target can be kept closer to the 90. So here the risk reward ratio is quite favorable enough, and much more than even our requirement of 1 is to 2. So that's it from my side for today's session. If any of you have any query or any idea to share, you can write to me in the feedback section, and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. Have a fabulous day ahead. See you next time, and do subscribe to the Ducoscopy webinar channel to stay updated on the market developments. Goodbye.